Rodrigo, thanks very much for joining us from Madrid. Just give us an update on, I suppose, what you're seeing as some of the kind of key trends or opportunities in the Spanish market at the moment.
We've always been very focused on building scalable platforms in areas where either don't have strong institutional capital looking at them at that point in time, they have fragmented ownership, and where we think that they're well supported by long-term megatrends that will allow us to sort of invest across different cycles. So bearing that in mind, the sort of the three key things that we're focused on at the moment are leisure hospitality. In June 2020, we raised 680 million in a first close for our latest fund. That's a pan-European fund, but just by the way that leisure works in Europe, especially sun and beach, a substantial amount of that will be deployed in Spain and Portugal. And then we're also looking at Italy, Croatia, Greece, etc. So that's one of the big themes, and I think it's interesting because we've been big believers in that for many years now, and I think this sort of the COVID situation has obviously put the sector into a fair amount of distress, which is I think very obvious to everybody. But we really believe in the long-term megatrend supporting that sort of leisure, the move from what is sort of consumption spend to experience spend. And we think that's very well supported by the new generations, the millennials. This is one of the few sectors where millennials are not a disruptor or an issue. It's actually an advantage. And we think that there is substantial pent-up demand. And we have anecdotal evidence from our current portfolio that as soon as people are allowed to travel, they want to, and they want to continue spending on leisure, and they want to continue spending on their holidays. And one of the things that we have seen in the context of COVID is we sort of evolved what was before very much a value add strategy where we were going for prime locations on sun and beach, for example, where there was a good supply demand imbalance, so growing demand but no additional supply because you can't build anymore on the first line of the beach. We're now seeing that we can actually buy very good, well repositioned already assets at very attractive acquisition prices, so substantially discounted versus pre-COVID, and we're getting to sort of even higher returns that we were targeting initially with what we consider to be a lower risk profile. So that's one of the big themes that we see. And there, by the way, we continue to raise capital. I think we're going to get to the sort of final close by June this year, and our hard cap there is 750, which gives us a good 1.5 billion of firepower to spend. I think the other key theme, and sort of very much in the sort of DNA of Azora since the outset, is rented residential. Rented residential for us has been the core strategy that we've had from 2003 onwards. We are fully vertically integrated in that platform. We are across most of our platforms, but this is especially the case here where we have a property management company with 150 employees, which manages all of our rented resi in Spain, where we are the largest owner of purpose-built rented resi, but also a number of vehicles for third parties. So without disclosing exact names, but if you think of some of the biggest players in the rented resi space, we do the property management for them as well. We are now pretty much done on the investment of our previous fund, which has been a succession of roll-ups from 2003 up to now, and I think the latest was in 2018. We had CBRE come in with Madison Capital and take out the old LPs and give us some new primary, and now we are about to launch our new sort of build-to-rent strategy in Spain. I think there we strongly believe that COVID has had an accelerating effect on the trends there. So again, as I said, we're strong believers in rented resi, but now what we're seeing is going back to sort of, let's say, great financial crisis mode in which the younger generation can't save because of the financial situation, can't save for a deposit on a house, so they're delaying buying that. We're seeing new household creation at a very fast rate. In Spain, we're seeing growing concentration in the main cities of population, so continuous inflow of people into the main cities. And all of that is leading to a pretty substantial supply-demand imbalance in the rented residential space. So if we think about where we are now and where the rest of Europe is, and Spain has traditionally been a buyer's market in resi, not a renter's market. If we were to think that we go back to we get to where the rest of Europe is, we've got 2.5 million rented resi units that we need to build over the next few years. So we like the trend there, and within the sort of broad rented resi space. We're very focused on the sort of middle segment and affordable segment. We think there's a pretty dire need to create new product and to create good, affordable, but high quality product. And we have, ample experience doing that. We think there's also a potential to do sort of public-private partnerships. And again, that's something that we've done time and again from 2003 onwards, in fact. And I think the last one of our sort of key themes right now is logistics. So if we think about how COVID has affected the real estate space in general, we sort of think of three buckets. We sort of what we call the outright winners. Logistics is definitely one of them. Rented resi, we think, is another one. Healthcare is another one. We then look at sort of other buckets where we put hospitality, which is sort of current distress, opportunity to buy at good prices, but we really believe in the megatrend. That's definitely hospitality. Leisure, which is another thing that we're looking at. And then the sort of, we really have to see how this pans out. And I'd put offices into there, although we feel a bit more comfortable now than we probably did a few months ago, and retail, where we think there's still distress to be had going forward, but there will come a point where retail does become attractive, and we continue to monitor that space. So logistics, we see as an outright winner. I mean, if you look at the capital flows and the investment trends in Spain and across Europe over the past few months, the past year, that sort of has played out in that way. It's definitely moved from being what was a sort of an alternative asset class or sort of ugly duckling of the real estate space to very much a core investment. And I've heard a number of big institutional investors, insurance companies, etc., saying what we had earmarked previously for offices is now sort of being earmarked for logistics, and all the outflows that we're seeing in the retail space. So anything we sell in retail, again, will probably be deployed into logistics. So a lot of capital going into that space, but on a more fundamental basis, the way that we want to play it is focusing first on last mile logistics, where we think that sort of plays to our strengths in terms of small acquisition size. You need people on the ground, very granular approach, very much sort of supply demand imbalance in as much as if you're going to first ring road locations, there isn't much more space to build. And we see, because of the level of internet penetration, e-commerce penetration in Spain, which was way behind Europe as we came into COVID, and is now pretty much in line with the average of Europe. So it's, let's say, a 4-year fast forward in e-commerce penetration for Spain. We think that there's going to be very strong demand for that sort of last mile logistics space. So we're investing in that now. We're raising capital, and hopefully we're getting something signed and committed in the next couple of months. We think that it's a very interesting time to be investing, not just in Spain and Portugal, but across Europe in this space.
Interesting to see there the sectors and the investment strategy. Rodrigo, thanks very much for joining us.
Thank you, Richard.